Ladies and gentlemen, for the third time in a row, I am sitting down with the great Stephen Fiorillo to talk about SoFi earnings. And once again, it has hit it out of the park. And you can tell by Stephen's face right now, he's excited. He actually put away the World of Warcraft this time to talk with us in full scope. I hope at least, right? Is that the case, Stephen?
Yeah, I'm not playing anymore.
No, I'm just playing, obviously, but
No, I'm
yeah.
really done playing for a little bit, unfortunately.
Oh yeah, you taking a break?
It's not as fun as it used to be.
Yeah. Not whenever you can't play during earnings calls. Now you have to pay attention.
Yeah,
So
it was a phenomenal quarter, right?
SoFi up 19.9% on the day that earnings was released. It has put a drawback down, I think like $10 roughly around at the time that we're recording this. But we have a lot to talk about. You had broken down in your article so many different things that I haven't even gotten around to look at. One of the things that you most infamously talk about is deposits per account. Tell me what you're seeing. And also you could share your screen if you want to share any visuals as well.
Yeah, let's do that. You want to start deposits by account? No problem. Let's share it. All right. So I love the quarter. I'm sure you did too. We had blockbuster member growth. We had phenomenal deposit growth, as we can see in the first two charts.
Yeah. Yeah.
But what stands out to me is average member deposits. I don't really see many people looking at this metric.
Can you
And
expand that chart at all? Like make it any bigger?
of course we can.
You can just grab it and drag it. No? Okay, that
Better?
works. Yep. Yeah.
So average member deposits every quarter, it's going up.
Yeah.
We're now over $2,000 average member deposits, singular. I mean, this is great. And more people are holding more money on the platform.
Yeah.
SoFi is not just growing it by members, they're not just growing it by deposits, they're growing it by both. And the average member deposit is going up, and it is great.
Yeah. Yeah. Now, it is actually probably even higher than this because this is for every member, and not every member would probably have a deposit account, I assume.
Correct.
But still, even that, even factoring in all the accounts, it's still continuously going up over and over per person. It's actually crazy.
Now, I could have missed it in the 8K or 8Q, but if they break it out by how many people actually have a checking and savings, I can rework the numbers very quickly. I don't remember if they break it out like that or not.
Um, Here, bear with me 1 second because I have the SoFi money numbers. But that won't be the only deposit. Like, I wonder if also the amount of people that are holding cash in SoFi Invest as well. There's a couple of them. SoFi money this at the end of this quarter was almost 2.7 million accounts, 2.693148.
Yeah, I mean, look, unless they come out and tell us exactly how many cash accounts they have, I'm just going to do simple math, members and deposits and net
Yeah.
amount.
Yeah.
But it's great for the average member. This is what they're holding. It's great.
So what stood out the most for you this quarter?
Two key words: in and buy.
Sure. Okay. You want to explain that for everyone?
Yeah, I'm going to say it. So if I just threw the gauntlet down, they're coming after everybody, and I love it.
Yeah.
So we've talked about this before numerous times, and LaPointe and Noto said it two different ways, but both ways get you the same exact result. And
Yeah.
I'm going to read the quotes. From Noto, he said, quote, on the Q2 earnings call, we remain well on track for GAAP profitability by Q4, end quote. The next quote, which I believe came in the Q&A, quote, in terms of profit trends, we're going to be front-loading market investments with sequential EBITDA expected to be marginally above where consensus is today for Q3 at 58 million. And we expect to see more of a ramp in Q4 EBITDA and achieve GAAP profitability in Q4. End quote.
Yeah.
The point said incremental GAAP net income margin was 36% for the quarter, which represents further progress toward our expectation of GAAP net income profitability in Q4 2023. End quote. And then the next one where he mentioned, I believe, came in the Q&A also, and he said, as we move toward expected GAAP net income profitability in the fourth quarter, we expect stock-based compensation and depreciation and amortization expenses to be slightly higher than reported in Q2 levels in both the third and fourth quarter of the year. So they are saying it two different ways, but they're both saying the same thing. And as I pointed out last quarter on the call, they said by Q4. That means at some point in Q3 may not be GAAP profitable when they report the bottom line number, but either the last day, the last week, or the last month, or some time frame in Q3 is going to be GAAP profitable if they're going to be GAAP profitable by Q4. And if they're GAAP profitable by Q4, that should mean when they report Q4 earnings in January, it's going to be a net positive number.
Yeah.
That's huge.
I think that you know what, like they said, they're taking a lot of the time right now to sort of front load their investment right now. Think about this. They just added where is it? Personal loans. Almost 80,500 new personal loans just this quarter. Record breaking. They never even had hit a quarter with 70,000 new loans. They passed that milestone, like a ton of new loans. Okay. But the actual lending revenue this quarter was actually down quarter over quarter. Okay. The reason being that you could be originating loans in June. They're not actually going to be new revenue making products this quarter because they need time for the clients to actually pay interest on those loans. It's the 80,000 plus loans that get written this quarter, $3.7 billion of originations that'll start to make money next quarter. The 584,000 new members is such a front-loaded investment that, like, I'm 100% certain that they will be profitable by Q4. I don't know if it'll be in Q3 if they're going to want to further their investment, but this was a really, really good move. This is an unbelievable quarter.
So look at it like this: 580,000 new members. If this becomes a new bottom, and they do this for the next 6 quarters, not saying they're going to,
okay,
saying hypothetically,
sure.
If this becomes a new normal because of word of mouth, then SoFi is flirting with breaking 10 million members by the end of 2024. Gets them to roughly like 9.6 million. So if you have some sequential growth quarter over quarter, you get to 10 million by the end of 2024. I don't think that is crazy if Q3 comes in around 580 or 590.
Yeah.
And they establish a new record. Now, we don't know what's going to happen. That may be far-fetched. But look, I didn't think they were going to get 580. I was blown away. I loved it. It was great. I mean, that's their biggest increase quarter over quarter on a numbers basis. It's great.
Yeah.
So think about it. All the bears should be shaking right now. And I don't care if SoFi goes to 7. I don't care. I'm not looking at this from the short term. It can retrace. Never said it wouldn't. But the bears should be shaking. The people who are short should be shaking for the simple reason that my opinion doesn't matter. Tanner's opinion doesn't matter. None of the analyst opinions matter. Want to know what matters? People voting with their wallets. And what are they doing? They're signing up to SoFi. They're not leaving SoFi. SoFi has a sticky environment. You're seeing deposits grow. You're seeing everything grow. So my opinion doesn't matter. The opinion that matters ultimately is the member opinion and the member opinion is voting with their wallet and saying, this is a platform that services my needs, and I'm sticking with it, and I'm going the SoFi path, not with the JP Morgan, not with the Citibank, not with the Bank of America. So anybody who is doubting this company, they were right for a period of time when it was going down. If you were doubting it when it was at 15, it still hasn't got back there. So technically you're still right. But
Yeah.
ultimately, I think they're going to be wrong and I'm going to be right.
Oh, man, I was even looking at Robinhood's quarter recently.
Very
I,
interesting.
sure. But
There was something I did not like in there, but it's very interesting when you look. You're basically buying their cash at this point.
no. I'm okay. Let's not turn this into a Robinhood conversation. I just wanted to say, you said people vote with their, with their dollars,
You're
and
going
it
to talk
doesn't
about the
matter.
members leaving, correct?
No. But they added 70,000 new accounts. I'm not talking about monthly active users.
Okay.
Just they signed 70,000 new people that quarter. 70,000. SoFi Invest, just their invest product, their brokerage product, added 100,000 new members. So the last quarter, or sorry, the last SoFi Weekly, where we can argue with Chris and Amit back and forth about which platform is better, the truth is people are still choosing SoFi Invest. They're not worried about it. People have different needs for their different brokerages, and it's seeming even at lower CAC costs, SoFi was able to collect more SoFi Invest users. I thought that was an interesting point, and your quote there had made me think about that.
Yeah, I mean, out of the two, I don't know which one's better. I did a podcast with TJ the other night, and
Robinhood is better. Like
and
there's
I gotta tell you, I was very surprised at how fluid what he was showing me was.
yeah,
I was surprised, but look, the
but
people
people
are
need to vote with their dollars.
the people are voting with their dollars, and from what I am seeing, SoFi is building a better mousetrap. And I'm very excited for this year. I'm very excited for next year, but I'm more excited for 2026 and 2027 because
Yeah,
there is so much untapped potential that SoFi has. So
yeah.
much. So when you think about where do they go from here? Well, it's probably pretty easy for them to start business. So they haven't unleashed business banking yet. They haven't unleashed business lending yet. They haven't unleashed business credit cards yet or purchase cards. They already have the infrastructure. So I don't think that that's a big uplift, and that's got to be a critical success factor that Noto's looking at. It's got to be on the whiteboard somewhere, especially with small, medium-sized businesses.
So when are we thinking? What's the prediction?
I don't know because they haven't talked about it.
Right.
That it's something where I hope somebody at SoFi that has a line to one of these people read my last article and reads this one because I put it in there. Maybe I'll tweet some of these ideas out, but this would be huge if they get into it. And
So
then
Noto has spoken about it. He said that that's definitely a road that they want to go down. It's just he said something along the lines, and someone in the comments will get this right, or maybe I'll put it up on screen if I can find it. But along the lines of, we want to make regulators happy before we go into more streams of business.
and that could be 6 months from now. Who knows? Maybe
Yeah,
he's waiting to get to 20 billion in deposits. Who knows?
but it's definitely on their roadmap for
Got to
sure.
be on the roadmap. And then assets under management. Get into wealth management. Get into being a 401k sponsor.
Yeah,
You're just collecting fees to look. What does Vanguard do? What does State Street do? What does Empower do? And I'm not talking about building the ETF products. I'm talking about straight 401ks. People are investing every 2 weeks. They're putting their money in a target-based fund or an S&P fund. You're not doing anything. You're just a custodian for the capital, and you're
yeah.
generating a fee. If you're going to become a top 10 financial institution, you got to do it because
Yep.
everybody else has it. And it's incremental, reoccurring revenue.
So really quick, you just said if they want to become a top 10 financial institution. Stephen, why did you say that? Why don't you explain to me why you said that?
Well, you know where I'm going with this. I'm not going to call the person out because I actually respect him a lot, but one of our buddies is wrong.
Okay.
So last conference call, Noto said he believes SoFi will be a top 10 financial institution. In previous calls, he has said it, but on this call, the analyst from JP Morgan, I believe,
Reggie Smith, right?
Reggie Smith, specifically asked him to define it. Noto gave us a definition. He said top 10 financial institution by market cap. Now, our friend who remained nameless because his due diligence is freaking amazing put it out on Twitter that SoFi would have to be a 4X. But that's actually incorrect because he was just looking at banks. Two keywords: financial institution. So I'm going to go over something right now, and I don't want to screw this up, so I'm going to pull it up.
Am I showing your screen?
No.
Okay.
Not yet. So there are 8 types of financial institutions that provide various services. These are major categories. To be considered a financial institution, you could be a central bank, a retail and commercial bank, a credit union, a savings and loan association, a brokerage firm, an investment bank, an insurance company, or a mortgage company. Those are the 8 categories. So our friend, who remained nameless, was looking at banks. When you look at financial institutions, let's go to Seeking Alpha and let's pull it up, and we're going to do it live.
Okay. Pre-recorded, but live, yeah.
Well, okay, sure. So if we are talking about, these are the top financial stocks. So when we do it by market cap, to be a top 10 financial institution, you got to take out Royal Bank of Canada, which is 134 billion market cap. That's a 13.5x from right here.
Yeah.
Now,
Yeah.
to get to the top 20, 94 billion. It's roughly an 8x. To crack the top 50, you got to get to a 51 billion market cap. It's 5x. Nobody expects this to happen anytime soon. But if Noto is correct, and if he can pull this off, these are the figures that he would need to get to make that a reality. And I would think that when he says top financial institution, he means financial institution, not a bank, because look at this. Schwab is 14, got S&P Global at 11, Morgan Stanley at 9, HSBC at 7, Bank of America at 6. I mean, Citigroup's at 22, Goldman's at 18. These are financial institutions.
I mean, yeah. I don't know. I find it hard to compare to the multiples of like a Visa or something like this.
Okay, so let's go there. Why can't SoFi have a hybrid tech/financial valuation? Why can't they? Let's really think about that for a moment. Anybody? And there was somebody trying to troll me on my last article about how other companies have just as much, if not more, technology than SoFi. Well, no, they don't. They don't. It's a simple fact. I mean, JP Morgan is subbing it out to a company called Thought Machine. So JP Morgan is a prime example, as they recently announced they're developing cloud-based core systems for its retail banking utilization software developed by Thought Machine. Does that sound a little familiar? Haven't we heard this before? Oh, yeah, we have. It's called Technisys and Galileo. So SoFi owns the entire back end. They just signed up another 4 or 5 clients last quarter. We know that from the conference call.
Yep.
They are currently, this is what gets me excited. They are currently in RFPs with large financial banking institutions. This is what I do, RFPs. No company is wasting their time going through the grueling RFP process, not just the due diligence and the brainstorming and the road mapping of what they need. Nobody is allowing, because this type of decision is not a 1 or 2 person decision. When you go
Yeah.
through an RFP process, especially this type of process, what I would think that you have multiple people from the tech team, you have multiple people from the finance team, you have your CFO in there, you probably even have your CEO on some of the meetings, depending on what company it is. You definitely have a lot of people from the finance team and from operations in there. Like, there is going to be a lot of people involved in this. This is a very intricate thing if you're doing an RFP for a new core banking platform. Now, no company is allowing these people to go through this process and waste their time doing this than other tasks to grow the company if they don't think that this is an important must have for the future. And if
Yeah.
that's the case, then they're not just doing this to go through the motions to see what's out there. They've already made the decision, they're doing it.
Yeah.
And
Yeah.
then also you have an implementation afterwards. It's not just we go through the RFP process, we select a company and it's over. No, you got to do implementation. There's a big pickup to implement this. So when Noto specifically says that they've been invited and they're participating in large scale RFPs, that means people are aware in the industry of what SoFi has. They think it is at the top because they are only inviting the top companies to this. They're not wasting their time with
Sure.
companies that don't have a shot.
Yeah.
And in most cases, let me rephrase that. In some cases, which I feel is probably the norm, you send a packet out in your initial RFP with a bunch of questions that need to be answered because you cut companies right off the bat. And you don't even bring them to the interview stage if they don't answer certain questions the way on your must-haves.
Yeah. Yeah.
So, look, a lot of banks are going to have to go through this because their banking technology is archaic. SoFi is clearly building the AWS of fintech. They are going to be able to white label, private label, whatever you want to call it, their own proprietary platform that they are going to use to their competitors. So is this really a company that's going to deserve a banking or financial institution valuation if they're the company that is powering their competitors and if they're the company that owns the software that their competitors are using? If Goldman, if Citibank, if just one of these large scale, Wells Fargo, we know it's not JP Morgan because they're having a different company develop it. But if one of these top tier companies ends up picking SoFi, what does that do for it?
Yeah.
Especially on the reference, especially when they use that as a name drop, especially when people start calling around. It's huge. It is absolutely huge. And people either don't understand or they think this is a joke, or maybe they're just not excited about it as I am, but it's incremental, reoccurring revenue that could give it a tech multiple. And then what's the technology worth? I mean, it's really exciting.
Man, I think about it just even whenever we're talking about multiples, because mainly it's just on the bank side right now, because that's what's been taking off recently. You're 100% right. Like, not only do I think that the macro switching over, and once interest rates start to fall, will SoFi get a higher valuation just from that, along with the rest of the fintech community, but also the tech platform. If that actually does start to outperform, because we've seen it be quite slow in recent quarters, it is like, this is similar to Amazon, where we have two separate businesses, and depending on which one's growing can hold up the valuation. Whether I'm talking about Galileo on the tech side, which just also happens to be kind of street named AWS of fintech. So
Yep.
a little bit of a little shout out to Amazon there, but also the bank side, which is just holding up all the growth right now. I mean, they are diversified. This is a diversified company for even like just talking about how small they are right now. It's quite interesting.
They're doing everything. They're going to do more, and in a couple of years from now, this is going to be a very interesting company. This is why, that I've gone back and forth between this and Palantir. Which one do I think has the most potential? For a little bit, I was starting to get away from SoFi, and I was leaning more
Okay.
toward Palantir for a little bit.
Okay.
I think I'm back on SoFi's got the most potential in that portfolio for the most upside over the next decade.
Yeah. Well, you saw a lot of upside on Palantir already. What's that at? Like, did it break $20 or something?
I
Right.
think it touched it. Look, I still think Palantir is going to be the second most important software company in the next 10 years behind
Behind
Microsoft.
Microsoft.
I don't think anybody will ever become more important than Microsoft from a software standpoint,
Sure.
only because of Windows, Office, Dynamics, AWS. I mean,
Or
it's
Azure.
Azure. It's going to be very hard to, I'm sorry. Yes, I got Amazon earnings on my brain.
Yeah,
But
all
yeah,
good.
Azure, I think it's going to be very hard to say that a company is more important from a software standpoint than Microsoft. But when you really research what Palantir does, I think that they have a very good chance at becoming the second most important software company. But I think SoFi could become a top 10 financial institution, which, if they do, they would have 13x based on the current market caps of the top 10 financial companies.
A
And
13x.
I'm not saying that's going to happen, but look, Anthony Noto, let's go over who this guy is for a minute.
Yeah.
West Point, Army Ranger, Warden. What else? Oh, wait.
Goldman, Twitter.
Goldman, big wig, Goldman investment banker, left, became the CFO at the NFL, went back to Goldman, took Twitter public. Twitter poached him from Goldman, CFO, COO of Twitter, and then, CEO of SoFi.
Yeah.
So, as one of the top investment bankers, he knows what he has to do to grow the company's market cap. He knows what the analysts are looking for. He wrote the book.
Yeah.
He knows what they're looking for. So,
and that seems to be the one thing that I absolutely love about SoFi and the management team is they directly know what game these analysts are playing. And in fact, there were a couple times where they got a little pushy about the discount rates that were applied to fair value of the loans, and they had to quickly shut that down, saying, "No. Let's understand the default rates are lower than they were last quarter, and the coupon rates, how much you're actually making on them, was up." Like,
well, before we get into that, because we're going to probably spend a little bit of time on that, this is a guy who has a contingency plan for everything. Okay, you don't become an Army Ranger and go to West Point without knowing how to draw up contingency plans, and he proved it. Let's share the screen because this is.
is it this one, the Seeking Alpha one? No. Okay.
No, I'm sharing it right now. So what happened in Q1 2020? Oh yes, pandemic. Oh yes, student loan moratorium. Okay, so student loans get chopped half mass. They're not operating the way that they used to because of the moratorium. Not many management companies can do what the SoFi team did. Not many management companies could make it out of this. What did they do? So this slide that I'm showing is the revenue from lending, technology, and financial services.
Do you have an extra bar in there at the end?
You know what I do? I probably did a calculation on the page before it.
Yeah, it's probably just written there. Anyway,
Yeah, so
aside from that, because I could just tell because it's not even labeled at the bottom. So
yeah, no, aside from that, I probably did some type of calculation to see how much something grew by.
yeah,
So
that's fine.
anyway, going from Q1 2020, they didn't wait 3 months. They attacked this immediately and they started growing revenue from tech and financial services. And we see it grow quarter over quarter, and the contingency plan's working. And guess what? In the lending segment, student loans dropped off, but guess what? They grew the personal loan book. They had contingency plan for lending. They also had a contingency plan to diversify from the amount of revenue lending generated. Lending was generating roughly 96% of their revenue in Q1 2020. It's down to 63 or 64% now because they're diversifying their revenue.
Yeah.
Their streams are from technology and financial services in addition to lending now. These are going to continue to get bigger. And look, tech was much bigger than financial services. Financial services is now starting to grow past tech for 2 quarters now.
Yeah. Yeah.
And that's going to continue to happen. And
Yeah.
tech's going to continue
Give
to get
financial
bigger.
services 2 more years and see where it is.
Exactly. And that's why I think that you can't look at SoFi from a 1 day, 1 month, 6-month period. You got to look multi-year. This is a company that's still in its infancy. And people want to bash them and they want to compare them to JP Morgan. Guess what? That's not a fair comparison because JP Morgan was started in the 18 freaking hundreds.
Yeah. Yeah.
SoFi was started 10 years ago or so. So
2011, I think.
all right,
Something
12,
like that.
13 years whenever it was started. So they are a young company coming into their own, and the best is probably yet to come. And if they keep executing on this, sky's the limit. I mean, how many management teams could pull this off
Yeah.
and not fade away? I mean, think about what they faced.
Yeah. And that's the thing that gets me most excited is knowing just like how many times that we've actually like before Chris Patel actually turned to be a bull on the company whenever he was quite bearish, he said, how is SoFi going to face in like a recession? And I was like, Chris, SoFi's been in a recession for the last however many years. They got their entire their number one business model completely wiped away from 100% to zero. Like
Yes,
ripped out from under them. Student loans became on a permanent pause. Not permanent, sorry, but like a anyway.
Well, the moratorium getting pushed back and pushed back and pushed back. We didn't
Sure.
even see it. We didn't even see it. Bring up the
rise in interest rates was another one. You know,
bring up the screen again. Let's go through your other thought. Origination.
Yeah, we okay. So perfect. This helps me. We also lost our home loan. Our writer for our home loans, lower.com. We lost them. We lost student loans through a myriad of a bunch of different pauses. Interest rates were going up. The marketplace for selling loans obviously deteriorated because old, more mature loans could not sell because there would be new loans that would be written at higher coupon rates. So why would you want the old stuff? All of that while you're looking at this chart. Please help explain what we're looking at here.
Yeah, I mean, look, this is just their total originations, which is correlated through the green line. You have personal loan originations, which is the red line, student loans, which is blue, and home loans, which is yellow or amber, whatever you want to call that.
Yeah.
And this is absolutely amazing because student loans are not back yet. We're not seeing shit from student loans.
Yeah.
Can I curse on this?
Yeah.
Okay. I'll try to refrain. We're not seeing much on student loans. The Fed increased rates again. Mortgages are 6-7%. We're not seeing a lot of activity there, but personal loans are still going. And guess what? We had over 4 billion of originations driven by personal loans. What happens in a year from now? What happens in 2 years from now? So I've been saying it all along, the Fed is not cutting rates in 2023. People think I'm crazy. They're not doing it.
Yeah. Yeah.
You know, it's already in August. It's already August. September is going to come. You may even get one more hike. I don't think we're going to. But the St. Louis Fed has projected rates are going to go to 4.5% in 2024, and rates are going to go to 3.5% in 2025. Whether that happens quicker or not, they are projecting 3.5% in 2025.
You know what's crazy is whenever we were doing predictions, I told people, I said, my predictions are going to be on the more bullish side because I'm definitely biased towards SoFi winning. But that being said, I said with all student loans, home loans, and personal loans, SoFi was going to write $3.7 billion worth of originations. Okay, 3.7 was my estimate. They did more than that
They
on
did more.
just personal loans.
And look, when rates come down, mortgages are going to skyrocket. Here's
Yeah.
why. Look at where mortgages were when SoFi was barely in the business and rates were low.
Yeah.
Okay. Look at that. They didn't have Wyndham at that point. When the Fed gets back to 3.5% or 4.5%, you're going to see this gradually go up. You're probably going to get to new highs. You'll get through $1 billion. You'll probably get to $2 billion at some point
Yeah.
because look, people who purchased a home in 2019 or 2020 are probably not moving unless they paid cash for their home. Because why would you get out of even if you bought your home in 2015 or 2016, there's a good chance that you refied when rates hit 3.5%. There's an even
Sure.
better chance that you refied when rates went under 3% if you didn't already refi.
Yeah.
Now, if you are in a mortgage with a 3.5 or sub 3% mortgage rate, you're not selling and buying a new home and taking on a 6 or 7% mortgage rate unless you absolutely have to because you change jobs and you have to move, or there is a life changing event where you have to move, or if you're making an investment for the future, trying to buy a home that's more expensive at a discounted price because of rates, hoping that in 2 years you'll be able to refi. So you're going to stick out the larger payments now and then hopefully refi in the future at a much cheaper rate and get a more expensive house for much cheaper because of your monthly payment going down tremendously. And then you can start playing the flipping game. So you're going to see activity start to boom in a year or two because of the Fed dropping rates. Eventually,
Yeah.
rates are going to get to around 2%, 2.5%, which means mortgages will probably be at 3.5%, 4% again. You can see a lot of activity. That line of business is going to be big, especially with Wyndham. You're going to see that line of business. You're going to see student loans firing on all cylinders, and personal loans will still be big.
Yeah. I mean,
So
but that's the
it's
great
going to
thing
be
about
great.
being diversified business is even if personal loans don't do as well as
The other
rates,
two will carry it the way personal loans is carrying it now. The
or
difference is in the future, you're going to have 2 out of the 3 carrying it, not just 1 out of the 3.
do you know what SoFi's market share for private student loans were during the moratorium?
Nope.
Do you want to take a guess?
I feel like I've heard this number before and it was less than 10% or something like that.
It
Something
was
crazy.
60%.
60%. Okay. Yeah. I don't know.
Yeah, but that was during you're probably thinking about it was less than 10% for personal loans.
Okay.
So I think we're at 8% for personal loans. But for private student loans during the moratorium, our market share went up to 60%. Imagine if that rate stays similar to where it is, but yet SoFi actually like the floodgates open, but people still know SoFi as the student loan refinancer because the brands for SoFi in this sort of student age bracket, millennial, Gen Z, is really strong, right? And it's only getting stronger. That's what I absolutely love. SoFi opened more accounts this past or in the first half of 2023, more accounts than Wells Fargo.
So I must be stupid. What's the bear case?
What's the bear? Well, that
I must be stupid because I
okay.
don't see one. And I hate saying that. I really do because every investment can go down. You can lose all your money investing in a company. Shit, I've had investments that have gone to zero. Okay.
Okay,
And
well,
I'm a
okay, then
halfway intelligent individual. And there are sometimes investments you take a shot on and they don't freaking work.
here's what I would say is at least what I think the bear case is and why there's such a high short position. You look at a
So that's something that
company,
we haven't talked about yet is the 15% short position.
right? So there's a 15% short position on this company, very little institutional buyers, which can lead to a lot of volatility, especially on the upside if they start to pour in and they see a like That's what happened with Palantir, right? Very little institutional investors. Then they wanted to get in. The stock went from 7 to 20. But that being said,
Palantir also had the benefit of the AI wave and actually AIPCon that look, we're not
you
ready
don't
to
think
talk about
you don't think a
Palantir,
change
but
you don't think a change in macro is going to be a massive wave for finance companies?
oh, absolutely. But what I'm saying is the reason Palantir went from 7 to 20 is because, look, if the AI wave did not occur, I don't know that we got to 20 this quick again. But because of the AI wave, I think that Palantir got put front and center because of AI Pecan, and Cisco Systems was a big part of it.
Yeah.
Cisco Systems is not coming to your convention and presenting and showing how your software is changing how they do business and how they're differentiating their products for their customers. You're not having companies like Jacobs go through the same thing, go on CNBC and tell Kramer that if it's not for Palantir, this wouldn't be happening. You have the biggest companies saying AIP is the software. And
Yeah.
then it just came at the right time with the NVIDIA craze and AI craze. And then you got Ives going on CNBC saying Palantir is the Messi of AI.
Okay.
And all that
Okay.
played a factor.
I don't want to get off course. All I'm saying is low institutional buyers, like the people that rushed into Palantir. Yes, there's retail money, but what really moves the stock is institutions. And if there's a changing in the way that they price a company, you can see massive price change, like what happened with Tesla, right? They completely revalued that company, and the company soared through the pandemic. But just going back to
I thought the bear case, they're not profitable.
yeah, but that's not a they
Exactly,
are.
it's not a bear case because look at the cash on hand.
Thank
Look
you.
at business metrics.
They're actually making money. They're just diluting it through stock-based compensation.
They probably could have been profitable this quarter. They could probably be profitable next quarter if they allocate expenses differently. I mean,
And I don't even want them to. I don't even care. I want 580,000 more
I have
people.
no gripes with them. They're front loading it for a reason. They know what they're doing. And you know, I love when people want to play Monday morning quarterback when they've never been in business.
Sure.
And
I do that every day.
And I love when people troll me that don't use their real name. It is hilarious. It is absolutely hilarious. No, all these people want to talk, and none of them use their real name, and it's all just hot air.
But let me finish my thought though, really quick on a bear thesis, because I think Lending Club had proved the bear thesis and did quite the exact thing that the bears were hoping SoFi would go through. They're in very similar business models. They are nationally chartered banks. They have customer deposits through cash accounts and checking accounts. They have personal loans as being their main revenue driver. So they're very similar companies. They both have similar amount of customer accounts, 4.7 million on the other side. But Lending Club never stopped selling their loans. They kept selling their loans and eventually started taking not losses, but a massive reduction on their gain on sale margin by selling their loans in this bad marketplace, because they're selling loans right now when a bunch of massive banks are also selling their loans, and they're flooding the market with a ton of commercial paper, which allows it to be sort of a buyer's market, picking and choosing what they think has the largest discount versus fair value. Okay. So that being said, of course, bears are looking at SoFi and going, they're going to have to sell loans. They have all their loans held for sale. They're going to sell loans, and they're going to lose just like Lending Club. What they didn't anticipate is Noto's simply just going to hold them and get more deposits and grow tangible book value faster than they can actually acquire new loans, so they can hold them for longer. Like, this is of course there was a record-breaking amount of member growth, and specifically in SoFi Money, because they have to fund holding loans going forward. And it took amazing management in order to make that decision. And now they're doing it. And that's the reason they're the only lender standing.
And they showed that because of their underwriting process, they have the highest quality loans, or let's say very high quality loans.
Even higher than Lending Club.
They don't have to sell if they don't want to. They proved that last quarter with the 4 versus 6% spread analogy. But this quarter, they showed that, well, hey, guess what? We can do great for our shareholders by selling some of the loans this quarter and writing new originations. The bear thesis last quarter was they can't sell loans. There's no market for it. Well, no, nobody believed Noto and LaPointe that there's a market. It was just more lucrative for us to hold them because generating an extra 2% was more beneficial for our shareholders.
Yeah.
This
And
time
all sold at
around,
higher fair values than what they were writing them at, by the way.
exactly. I mean, there is a market for their loans. They proved that this quarter.
Yeah.
They are doing just fine. And unless you are running a bank, you shouldn't be criticizing because they obviously know what they're doing.
Yeah. Yeah.
And I'm not going to sit here and criticize what they're doing. They're growing the company and they're doing what they need to do. And this is a management team that continuously delivers on critical success factors. And if they continue delivering on critical success factors, they are going to continue to grow. Market cap's going to continue to go up. And maybe Anthony Noto's correct and we become a top 10 financial institution. Who knows?
I definitely see this being a absolute multi-bagger in my portfolio.
Yeah.
It's the stock that I feel super comfortable holding now, especially after this quarter, even though they didn't break profitability, knowing that they were able to lower customer acquisition costs so low and acquire that many members in a single quarter, like really proves that they are getting better at the flywheel. They know how to spend their sales and marketing dollars like very efficiently. And obviously they know how to monetize their clients. It's a bank. Like,
Yeah, I mean it is the future of banking, some would say. And they don't have the overhead that traditional banks have. And if traditional banks try going the SoFi route and closing branches, that's probably not going to be good because they may lose customers doing that because their customers could be people who just want it for reassurance. The younger generation does not have as much of a need as my generation or the generation before me for traditional brick and mortar banking.
it's true.
Everything's cloud. Everybody wants instant gratification. Amazon's a perfect example. I only see Amazon packages in New York City. You walking down up and down Midtown, guess what? The majority of packages that are being unloaded from trucks is Amazon. Not just from Amazon trucks, but from rented trucks from Ryder and other companies. It is a sea of Amazon packages. In my building, I would say a good 60 to 70% of the packages are from Amazon.
Yeah. Yeah.
And I live in a pretty big building. So, I mean, everybody wants instant gratification. If I order something in the morning and it's on Prime, I would say 40% chance I'm getting it same day.
Yeah. It's crazy.
It's
Crazy.
crazy, their supply chain. But it just
Okay,
goes to
but
show
don't
you.
make this an Amazon
No,
call.
no. But think about it. Netflix. You no longer have to wait a week for the next episode to come out. You no longer have to be in front of a TV at a certain time to catch something. I mean, everything's on demand, instant gratification. Why would anybody think that's not going to spill over to banking?
Yeah. Yeah.
The
And
younger
and
generation.
it is seeming like a lot of these companies, like Ally had a good lead. A bunch of these companies are trying, and they just can't seem to get an efficient, best in breed product similarly to how SoFi has done it. Now, obviously, Ally has great auto lending products and these sorts of things, but they do try to do invest products, credit cards, a bunch of other cross selling products into this sort of one stop shop. But it doesn't have any sort of cross selling ability. The cross selling for Ally is like less than 10%. It's really, really weak. And like what SoFi is doing is really, really powerful. I don't know, but well, okay, let's pivot it over. So, ladies and gentlemen, Steven and I are also going to have a conversation about PayPal. If you want to see that, that's going to be a members only conversation. So, after you've hit subscribe, you can just hit that join button down below, or it'll be in the description to join the members only conversation so you can meet us there. But aside from that, go check out Steven's links down in the description down below. But we'll see you guys later. Bye for now.